Securities analysis is the process of evaluating financial instruments, such as stocks, bonds, derivatives, and other securities, to determine their value, potential risks, and expected returns. It is a key component of investment decision-making, helping investors and analysts assess whether a security is overvalued, undervalued, or fairly priced. The purpose of this lecture is to provide students with a comprehensive understanding of securities analysis, the systematic evaluation of financial instruments such as stocks, bonds, derivatives, and hybrid assets. Securities analysis lies at the core of investment decision-making, enabling investors, analysts, and portfolio managers to determine the value, risks, and potential returns of securities. By mastering securities analysis, students will be able to make informed judgments about market opportunities, design investment strategies, and manage financial risks effectively. This lecture emphasizes both theoretical concepts and practical tools. Students will gain insights into different types of securities and learn to apply multiple analytical approaches: fundamental, technical, quantitative, and behavioral. The ultimate goal is to equip learners with a multidimensional framework for evaluating investments, balancing financial data with market psychology, and understanding how global trends shape asset values. This module will cover the following topics. 1. Types of securities, including equities, fixed income instruments, derivatives, hybrids, and emerging digital securities. 2. Fundamental analysis, assessing intrinsic value through macroeconomic indicators, industry conditions, and company financial statements. 3. Technical analysis, examining price trends, trading volume, and chart patterns to forecast short-term market movements. 4. Quantitative analysis, applying statistical models, risk metrics, and portfolio optimization tools. 5. Behavioral analysis, exploring how investor psychology, cognitive biases, and sentiment affect market behavior. 6. Valuation models, focusing on tools like the discounted cash flow model, ratios such as P/E and ROE, and creditworthiness assessment. 7. Risk assessment and management, using measures like beta, value at risk, and diversification strategies. 8. Practical applications, analyzing real-world case studies of equities, bonds, and derivatives, and integrating multiple approaches for decision-making. By the end of this module, you will be able to define securities and distinguish between equities, debt instruments, derivatives, and hybrid securities. Conduct a fundamental analysis of securities, including economic, industry, and company-level assessments. Apply technical analysis tools such as moving averages and chart patterns to evaluate trading opportunities. Use quantitative methods, including regression, Monte Carlo simulations, and portfolio optimization models. Incorporate behavioral finance concepts to identify how biases and sentiment influence market dynamics. Evaluate securities using valuation models, particularly the DCF approach and key financial ratios. Assess risk by interpreting volatility measures, beta coefficients, and portfolio diversification strategies. Integrate multiple analytical approaches to build informed, balanced investment strategies. Conclusion. This module provides students with the essential knowledge and skills for securities analysis, bridging theory with real-world practice. By learning to evaluate financial instruments from multiple perspectives, students will develop the ability to make sound investment decisions, manage risks, and adapt strategies to changing market conditions. Whether preparing for a career in finance, investment banking, asset management, or personal investing, this course builds a strong foundation in one of the most critical areas of financial practice.